Hi everyone, I am Shruti and welcome back to G2 Financetech's weekly market update, your global wrap up of how the world's markets moved and what drove them. This past week brought a mix of cautious optimism, shifting expectations, and some positive developments in trade negotiations, but also signs that inflation and economic uncertainty are far from behind us. Let us break it down region by region. United States, eyes on Geneva and the Fed's Balancing Act. US stocks ended the week narrowly mixed. The Nasdaq and S&P 500 slipped slightly, while small and mid-cap indexes extended their winning streak to 5 weeks. What moved markets this time? Hopes for tariff de-escalation played a key role, especially after news that US and Chinese officials were planning to meet in Switzerland for trade talks. Optimism climbed it after the US and UK struck a new trade deal, the first since Trump's tariff overhaul. At the Fed, there were no changes to interest rates, but plenty of discussion. Jerome Powell made it clear that the path ahead is murky. The central bank is watching data closely and remains in wait and see mode, weighing potential risk to both inflation and employment. The message? Policy changes aren't off the table, but timing will depend heavily on how tariffs ripple through the broader economy. On the economic front, ISM Services PMI ticked higher in April, showing modest strength. But inflation concerns bubbled up again as the prices sub-index surged to its highest level in over 2 years, thanks in part to those very same tariffs. Treasury sold off and yields rose midweek, while corporate bonds saw mixed performance. Investors are still trying to read the Fed's next move. Europe. Central banks shift gears. In Europe, the picture was mixed but largely upbeat. The Stoxx 600 posted its fourth weekly gain, helped by a combination of easing trade fears and steady corporate earnings. Germany and Italy posted the strongest gains, with industrial output in Germany jumping a solid 3% as manufacturers rushed orders ahead of new US tariffs. Meanwhile, central banks were in focus. The Bank of England cut rates by 25 basis points, though the decision wasn't unanimous. Some members wanted to hold. Sweden and Norway held steady, but both hinted that rate cuts may come later this year as they brace for the broader impact of US trade policy. The message across Europe's monetary leaders? Stay agile. Japan. Trade talks lag. Inflation lingers. Japan's markets rose again this week with the Nikkei up nearly 2%. But behind the rally, risk remained. The yen awakened to its lowest in a month as hopes grew for US China and US UK trade de escalation. Bond yields rose in tandem as investors reduced their exposure to safe havens. However, Japan's economic data disappointed. Real wage growth fell for a third straight month, missing forecast, while retail and manufacturing indicators softened. Trade negotiations with the US remain in early stages, and Japan is pushing hard for tariff relief. At the Bank of Japan, the outlook remains cautious. While rate hikes are still on the table, the bank is holding steady for now amid external uncertainty. China. Talks begin, stimulus stays ready. Chinese markets were buoyed by two things: signs of easing tensions and fresh stimulus. Stocks rose as Beijing confirmed upcoming trade talks with US officials in Switzerland. Meanwhile, the People's Bank of China announced a flurry of easing measures, including a cut to the reverse repo rate and fresh liquidity injection to the tune of RMB 1 trillion. While exports to the US have slumped due to April's 145% tariffs, Chinese firms have quickly pivoted to other markets, notably India and the Europe. With US demand weakening, Beijing appears ready to cushion the blow through policy tools including targeted support for infrastructure, consumption, and small businesses. G2 stake. Light at the end of trade tunnel. This week showed that markets are eager to look past the initial tariff shocks, but policymakers, central banks, and investors alike are still navigating uncertainty. Trade talks may offer a path forward, but risks remain as inflation pressures resurface and wage growth remains uneven. At G2 Finance Tech, we believe this is a time for selective positioning. Stay nimble, look for quality, and watch the policy signals closely. Volatility creates both risk and opportunity, and we are here to help you read the signs. That's it for this week's G2 Weekly Market Update. I am Shruti, and as always, thank you for joining us. We'll be back next Sunday with another global roundup. Until then, stay informed and stay ahead.